All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I guess it's afternoon for most of us, but about 2 hours left in the market here today, and we have a market that's been soft all day, been weak all day. Had a 20-point bounce here, which is kind of the I guess. I don't want to say the new normal for bounces in this market, and since we've had some of this corrective period, but sure seems like a new normal. About a 20-point bounce, is very common to see, but weakening off here just a little bit in the last 5 minutes, but not with a ton of velocity or real kind of vigor in the selling. We don't see a lot of volume. We don't see a lot of rapid price movement happening, and we had some good volumes this morning. They were very strong volumes for a Monday morning, but the rest of the day they pretty much tapered to be kind of a normal Monday overall. But anyway, market down about 28 points here, and we have bonds slightly higher. We have the VIX up about 10%. Consumer staples are in the green while all the other sectors are red, and there's some big bloody red things out there like a Vale or even an Amazon, but there's some green out there too. The Western Digitals of the world, JP Morgan, Masco, American Airlines. There's a lot of green out there overall. Now, I want to go out and take a look at two things here with you. One is some of the technical setups that are out there, both bullish and bearish. And two, Caterpillar. And we'll start with two. We'll start with Caterpillar. And this is a stock that I gave you kind of my initial thoughts on this morning, and went back, listened to the conference call, and kind of went through some of the numbers and some of the reports. And it's a very interesting, report here. And we're dealing with a stock that, if we just come and put some of the metrics on here. So price to sales, right? We'll come in here to a price to sales. We'll come in here to a price to book, which to me, they're the two best, valuation metrics. We'll put in a PE ratio just for kicks and giggles here. And then revenue. And then let's go with some margins. Let's go with some margins here. We'll go with operating margin. And let's just come over the past 10 years. And price to sales ratio, okay? What's the price of the stock relative to units sold or what it sells? It's at 1.4. And you can see with Caterpillar, price to sales ratio just goes right along with the stock price, right? So it's not the best way to look at a Caterpillar. Price to book value, kind of the same. Right? It's nowhere near the cheap levels, right? It's nowhere near the cheapest levels for Caterpillar, but it also it's also not that expensive. PE ratio down here at 20. It's not expensive, not cheap. Here's the revenue, right? And we're talking about revenue uptick. What's some of the concern? Some of the concern is that they don't see, real revenue growth. Albeit, though, Caterpillar came out and said, no, they're going to have revenue and earnings growth here in 2019. Right? So they are expecting to have, growth associated here with them. The other thing that they're expecting is their margins to improve because they've raised the price on some of their products, and it's one of those where investors are a little concerned with the price raise that maybe the revenues go down. Yeah, margins might go up, but revenues go down. But you can see margins aren't a huge issue for Caterpillar. They've had some pretty good margins here of late since they made some of those restructuring changes in 2016. So, this is a story where the stock isn't cheap, right? It's not super expensive. And it is just kind of in one of those positions right now where if the global economy goes up, Caterpillar will go up. Global economy goes down, Caterpillar will go down. JP Morgan came out this morning and defended it. Defended Caterpillar, said its valuation is compelling. Basically called it basically talking about it being a cheap stock. But then they put a caveat in there for the ultra long or for the very long term. Right? And what's that tell you? Well, when an analyst comes out and says, hey, you know what, this stock's cheap in the long run, it tells you they're a lot concerned about the short run. Right, so they don't want to have to be held accountable for anything in the short run with it, and they understand there's some serious short run risks here when it comes to Caterpillar. And when I look at Caterpillar, I'm sure we'll have analysts commenting on it here tomorrow as well. But as I look at the earnings, I look at what was said, I look at what's going on. This is not a stock that I can make a good argument for 200. It's a stock that if the global economy drops, Caterpillar will go back to double digits. That's the risk. There is double-digit risk here on Caterpillar after this earnings report. Even if Caterpillar is trading in double digits, it's still not historically cheap. All right, so this is one that does have significant downside possibility. So if I'm going to be an investor in it, I want to make sure it has serious upside potential if things go right. And yeah, over the course of 2, 3, 4 years, absolutely. Over the course of this year, yeah, could. We could be talking about this stock up at 180 by the end of this year. But it would take a lot of things to go right. This is going to be a stock that needs, for me, from an investor standpoint, I'm going to need a much better charting dynamic, to come here with it, to justify what the fundamentals are and the fear of the fundamentals. And the fear of the fundamentals is what? The fear of the fundamentals is that if revenues downtick, what's going to happen, right? If revenues start to downtick, if we don't get growth, what's going to start to happen? You even had Caterpillar in their call come out and talk about, a global downturn, essentially, a financial market drop. And they said they don't expect hearing them talk like that. That's not a way they would talk 2 years ago or even last year. But, that is a popular conversation. And bottom line is, they are not immune from the trade war. They're not immune from government shutdown. They're not immune from, a lot of the risk factors that are out there. And they didn't exactly give a report that makes investors feel comfy, cozy at night, here that says, hey, you know what? The downside risk factor, very minimal. Very minimal, right? When we go out, we look at a stock like an AT&T around 30, right? And we talk about AT&T around 30 and how cheap it is fundamentally. Yeah, it's going to take drops, it's going to have pops and everything, but the reality is it's an incredibly inexpensive stock fundamentally. And, would I rather own some AT&T or some Caterpillar right here, right now with everything that's going on? Probably some Caterpillar. We'll see AT&T earnings here soon, but overall, I'd rather own AT&T. We'll see their earnings here, very soon. But overall, Caterpillar doesn't have that cheapness. Caterpillar does have a bearish argument for sub 100. I don't think it gets there, right? I'm not saying I think Caterpillar is going there. I'm not saying I'm playing for that. I'm saying the argument for it is significantly greater than what it has been. And Caterpillar has been a phenomenal bullish story here for a while. Over the last year, it's had some big pops, some big drops. But this isn't something where we look at the metrics and we can make an argument for, this type of move again here in Caterpillar that it had in 2016, 2017 that was so kind of momentous here with the company. So overall, Caterpillar, it's one that for me, from a trade standpoint, I'm willing to trade it without much of a bullish bearish bias, meaning, if I get a technical down signal, willing to run with it. Technical up signal, I'm willing to run with it. But I don't expect this to, be a big market outperformer one way or the other. I suspect it'll probably ebb and flow with the market overall, at least until we start to get, some data from Caterpillar and some of their monthly sales data here. When we get a little bit of that, that might give a little bit of a glimpse, into whether 2019 is tracking higher. One of the hard parts for investors with Caterpillar is they've stopped really giving guidance. And, that's becoming a little more popular with certain companies out there. to kind of stop giving, longer term guidance. And, that's just one of those things that's going to make a stock more volatile around earnings because investors are going to be left to guess. Now, Caterpillar did give some guidance. They didn't exactly, leave it blank there, but overall, it's not one that I think you can go out and buy here and expect that over the next 3 months you're going to look and see a big green profit there, and or over the next 3 months, you're at least not going to see some downside. I think there's significant downside here, and something that has that risk in a much bigger way than just headline risk here overall. So that's that's my take here on Caterpillar where it is. I don't really find it very investable right here. That could change, but right here where it sits, I don't look at this dip and go, wow, this is one of those dips to buy. This is one of those dips where the market's kind of getting it wrong, or the market is slanted one way or the other. It doesn't look like that. This looks like one where the market's actually getting it right and reacting properly here. With Caterpillar. All right, so that's Caterpillar. Now, one thing Caterpillar doesn't have right here is a good technical setup, right? It's not like we can look at Caterpillar and go, well, let's go buy calls based on this or puts based on... No, it's just kind of in no man's land here, post-earnings, and, just not a great technical setup right here with it. That said, there are quite a few things with a very interesting technical setup. Right, and whether you're bullish or bearish, some things where the risk rewards have kind of tightened up a little bit here today, and we haven't had a lot of these types of days. Number one, take a look here at Twilio. Right, Twilio gap down, sold off here, and you can see the low here of 100. Right, the low here of 100. If you're bullish, you want to be a buyer, hey, that's a great mark to kind of base a sell off or base a buy off of, right? If you're a seller, you want to buy puts here on Twilio. The high from Friday is a great place to go off of. It's one of these where we have some of these ranges setting up over the course of Friday and today, where if the high breaks, all right, it's off to the races. If the low breaks, it's probably got some serious sell, and we see a lot of stuff like this that isn't, some of that abandoned baby pattern that we talked about earlier this morning. And so, you could take a look at it, and I don't think it's one where you go, well, the overwhelming probability is that it goes down or that it goes up. The chart pattern suggests path of least resistance is higher, right? But if the market decides to sell off, well, the chart pattern isn't going to matter. Twilio is going to go down. And so using kind of that $100 level as a stopping point for a call purchase, or 105 as a stopping point for a put purchase, sets up. We start to see some setup really kind of coming in there. Micron. Micron here, big 2 days at the end of last week. This thing went from 35 to 39, right? And do you want to chase it up at 39? No. You go look at Micron after 2 big up days. It tends to have a pullback day. And okay, well, is this all the pullback that it's going to have? Is it going to have more pullback? Well, bottom line, today's low. You could kind of run with that and say, all right, I'm going to buy Micron off of today's low. And it gives you at least a semi-decent risk-reward area, to run with here with Micron. Though I'd be very concerned if Micron gapped down tomorrow, even if it be 30 to 50 cents. I think a gap down on Micron tomorrow would be pretty dangerous with this pattern and increase the odds of basically a bullish trap. Now, the volume suggests that it's not a bull trap, but, it is something where if it does decide to break below today's lows, the odds there of that bullish trap are very, very, very high. Now, is Micron going to gap tomorrow? Yeah, most likely, right? I mean, it's one that, it's one that AMD is going to report earnings on tomorrow afternoon. right? So, there's going to be some movement in Micron. There's going to be some money activity. To me, it's a great day trade. Like, if you're looking for a stock to really kind of day trade, even using options in this market, I think Micron's one of the best. And, let's face it, Micron's already reported earnings, but they're still subject to what other companies are saying and doing. And NVIDIA gapping down big here today, really drove Micron to gap down big here today. And in fact, if I come in and I put up the chart here of Micron, you can see the pre-market, right? This is all pre-market they're selling. And so the low was hit right on the open. This has been a stock with far more buy pressure in it today than sell pressure, and really just that NVIDIA pre-release that came out is what drove Micron lower. But the bulls stepped in and bought it up. They've been fading it ever since, but overall a very viable day trade candidate in this type of a market, one that is getting some substantial movement here. Now, I was asked about Tesla. We got a report that China was cutting back one of their big investments in Tesla, and that dinged Tesla a little bit here, but we've seen it popping back on up, and this is a stock that's gone back below 300. Right, back below 300. Excuse me, it was not China; it was Saudi Arabia. Has cut their exposure to Tesla here, and so it's one where I don't really care about the news. Right, fine, they cut their exposure. All right, that accounts for some of the hard selling that we've seen. But here under 300, this has been a stock that found some nice support. Here back in December below 300. It's been a more prolonged period of time in August, September, October below 300. I'm watching this for some sort of gap above 300. I do think that would be chaseable. I do think that some short sellers would have to start to pop out above 300 here, at least in the ultra short term. Now, when thinking about it, Tesla has earnings on the 30th, so here on Wednesday after the bell. So that's going to create some big movement. And if you look at where just some of the option values are here, here we go with Tesla, maybe. If you look at where the option values are, it's very expensive going into earnings. It's pricing about a $30 move or about a 10% move in the stock, right? That's even big for Tesla. 10% is really big. And if you look at some of the spreads, they're not exactly cheap. You come out to something like a 330, 325 spread. It's going to cost $1 to possibly make $5, and that's that's if the stock gaps up 10%. You start to get into the money. So they're just not paying very well. The option makers have this, the market makers have this one spot on here as far as the pricing, which over the years they continue to get better and better at when it comes down to it. But in all, there's not a real cheap way to play it. So this is one where if you have a bias and you want to run with the bias, call spread can help to offset some some of the cost of being involved here with it. But there's not a really inexpensive, cheap way to play this thing and to play it higher. And so it's one that does have quite a bit of risk. But if you're looking to trade it, pre-earnings, it is one where let me show you the hourly here. It is one where you can buy it off of this kind of, I would go with the 292 level, which is kind of where we saw some of the buying really step into it today after the Saudi news. And that 292 level gives a few dollars worth of risk, obviously a little gap risk, but gives you fairly tight, downside risk parameter for something that could easily make a little bit of a run going into earnings here. And let's face it, when it comes to Tesla and their earnings this quarter, expectations are not very high. They are not very high at all. In fact, I think you could argue this is one of the lower expectation quarters that they have entered into. So those are a couple, from an upside standpoint, that I think are very interesting. Not that the odds are overwhelming, but they offer a good kind of risk dynamic here with them. On the downside, I think it's one of those where it's a lot of the stuff we talked about earlier today, where it has this abandoned pattern, right? Where it has this abandoned pattern, and so what? Okay, you know what? It opened at this level and it rallied a little bit today. Okay, fine. That just has no material impact on future direction. It is one though that even on the XLF, and you say, well, you know what? I don't want to jump in right here. All right, it breaks below today's low tomorrow, it's gone. And a lot of these patterns like this, if they break below the lows, especially if they gap down below today's lows, they have some serious selling ahead of them. And it could get fast. It could get very, very quick. And so, if you look at these, I don't recommend going and buying a weekly option, but, you can set something up on the downside using the closing price from Friday. And they're just a whole mess of these types of patterns out there in the market today, and you kind of take your pick of which one you want to roll with, and obviously taking into account earnings and everything else there, because there are a lot of companies where you look at their options and they have earnings priced in, and rightfully so, and 'tis the season. But anyway, those are kind of how I'd look at some of these setups here, out there in the market today. If you take a look at something like an emerging market ETF and EEM, you can see this same pattern emerging, this kind of abandoned kind of pattern. And the EEM is known for gapping, right, and having sizable gaps. But, this is even pretty good for the EEM. I think this is something where if it opens weaker tomorrow, I think you'll see a lot of selling really kind of come into play, really hit hard overall. But don't think it's lost on investors that the last two first days of the month, or first days of the week, last week Tuesday, since Monday the market was closed, and the week prior Monday, we saw notable gaps down in the market on some catalyst, and the rest of the week the market just climbed on higher. We've seen that both weeks, so that is in the back of the mind of investors. That is something that I do think is keeping some of the selling at bay here today. And while last week, gapped down on Tuesday and climbed back the rest of the week, it didn't break into a new high, and so that is notable, has to be paid attention to there. But we had a gap down right back here on this Monday that never really saw any sell pressure materialize. A gap down where all we saw was on Tuesday sell pressure, and now today a gap down where we're just not seeing a large magnitude of sell pressure coming into the markets. In fact, we look Micron. It's been mostly buy pressure in some of these names that are out there in the market today. Okay. With XLF, I haven't decided what I'm going to do. I haven't made a final decision. I know what I'm going to do. I'm going to hold it. That's me. That's me. I will be kicking myself hard if I sell this and it's trading at 25.25 tomorrow, and I think there's a good chance that it's trading at 25.25 tomorrow. And so I'm going to hold it and run with it. Would love to see it sell off just a little bit into the close, but I don't think the closing action is going to matter. The closing action in this market hasn't mattered for the last weeks. It has not been something where you can look, market rallies into the close, okay, it's going to go up the next day, or vice versa. We have not seen any real pattern over the last about 2 months, right, where the closing action really means anything. And back in here, the closing action rarely meant anything. And we've kind of seen that same thing on the upside, where we've seen the market sell off into the close only to gap up, or the market to rally into the close close only to gap down. So I don't believe, in looking at the dynamics, I don't believe the closing action is going to mean a heck of a whole lot. But the earnings that we get, the corporate earnings that we will see here tomorrow morning specifically, and then from from an economic standpoint, it's one where the data is still fairly mixed. It's not getting a big downside bias associated to it here just yet. We saw the Dallas Fed survey here this morning. Came in a little bit better than expected. Came in at 1. So the production index hit 14.5. So a little bit better than expected. A little bit better than the consensus, but not exactly a great number. Tomorrow we're going to have a Fed meeting begin. We will have the Fed announcement here on Wednesday, as well as with the press conference going on. This isn't one where the market's really expecting the Fed to raise rates, here overall. So we have that. We have international trade data here tomorrow that will affect the U.S. dollar. So a little bit, there coming out in the U.S. Globally. Same type of thing, just little stuff. Japanese retail sales tomorrow, Italian PPI data, just nothing that's overly significant until we get to Wednesday night and we get this manufacturing number here out of China. This tends to be an important one, and then we'll get another one on Thursday night. So these two pieces of data, I expect that they will be market moving. May actually be more market moving than anything else. Yeah, we'll get GDP and everything else fine, here, but I don't think that'll be all that significant. And then we're back into a new month. As far as the data, the manufacturing index here in the U.S., the PMI number, ISM number, as well as the jobs report that will come in here. I believe this Friday. Yeah, this Friday we will see the jobs report. All right. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.